Bitcoin exchange traded funds or ETFs are pools of Bitcoin-related assets offered on traditional exchange by brokerage to be traded as ETFs. The intent behind these ETFs is to give retail investor and investor not comfortable investing in cryptocurrencies access to them without actually owning them. Learn more about Bitcoin ETFs, how they work, and what's available. What is a Bitcoin ETF? A Bitcoin ETF is an exchange-traded fund comprised of Bitcoin or assets related to Bitcoin's price. They are traded on a traditional exchange instead of a cryptocurrency exchange. Theoretically, Bitcoin is purchased by the company. Securities and so are traded on an exchange. However, the Security and Exchange Commission continues to reject this proposal. There is no cryptocurrency ETF directly representing an underlying coin. Currently, the underlying assets within Bitcoin ETFs are linked to Bitcoin future contracts traded on the Chicago Mercantile Exchange. The first concept for a Bitcoin ETF emerged shortly after investor and broker noticed that Bitcoin price were trading upward, and the cryptocurrency was becoming more popular. Most importantly, there appeared to be an opportunity to generate returns from buying and selling Bitcoin. As Bitcoin's price rose above several $1,000, retail and average investor lost the opportunity to invest in Bitcoin directly. Brokerage, responding to demand for investor access to Bitcoin, began to design Bitcoin exchange-traded fund application with the Securities and Exchange Commission or SEC for approval started within the Winklevoss brothers. Understanding Bitcoin ETFs in an exchange-traded fund that tracks stock. The stocks are purchased by the fund. These are the fund's holdings, and the company that bought them over fractionally are on exchange. We trade nearly 24 hours per day, 7 days per week. A Bitcoin ETF following this structure would need to purchase and hold Bitcoin. It would then offer fractionalized share of its holding on an exchange, which could be traded similar to a traditional ETF. A futures contract is a standardized contract where two parties agree to exchange a specific quantity of assets on specific day for a particular price. A Bitcoin futures contract is an agreement between two parties for the exchange of a contract unit of Bitcoin. In this case, one contract unit is 5 BTC. The fund creator shares with price based on the current price of one contract unit and offer it on exchange for trade. The first official Bitcoin-linked ETF was the Forex Bitcoin Strategy or ETF, approved by the SEC in October and listed on the New York Stock Exchange. Goals of Bitcoin ETF in their current form and the form desired by many investors. Bitcoin ETFs are designed to allow more people to invest in Bitcoin without the necessary expenses and hassles of buying them. They eliminate the need for security procedure and exclusive fund while providing a familiar investment type. security. While you don't technically have cryptocurrency in your wallet, you have security keys that you need to safeguard. If you buy your cryptocurrency through an exchange, you can choose to have your keys stored on that exchange if it offers that service. However, wallets and exchanges can be hacked and keys stolen, which means your cryptocurrency can be stolen. You can store your keys offline using several methods, but none of these methods are secure or guaranteed, and ETF don't recommend you to own any cryptocurrency. Store keys safely, or more the keys back and forth between different types of storage. Your own share of the fund which take the risk of storing keys for you. High price. One of the most significant obstacles for average investor is price. Bitcoin or BTC set a record high of close to per BTC shortly after the forecast Bitcoin ETF was listed on the NYSE. Over the new few months, its price began to drop. So even at low price, retail investor may not have the asset to forecast. How to invest in Bitcoin or ETFs? If you're looking to invest in Bitcoin ETFs, you can purchase them through your broker or advisor if they offer them. There are several Bitcoins that trade on exchanges such as New York Stock Exchange, Arca, and Nasdaq. It's important to note that these ETFs are not entirely composite of Bitcoin futures. For the most part, they invest in traditional securities holding Bitcoin futures contract when it meets the fund strategy. For example, the forecast Bitcoin strategy fund is designed to hold Bitcoin futures contract only when positions are profitable. Otherwise, it can hold security of Bitcoin-related companies and money market instruments. It can also borrow using reserve repurchase agreement. Thank you for watching. Don't forget to like, comment, and subscribe.